Good evening, everybody. Thanks for watching. I'm Pat LaChapelle. I'm working more on my stock market tool today. I work on this every day and I'm slowly making progress towards a model that I could implement live trading with real money. So, what I'm up to right now, I've made a lot of progress. I've got a good model, I've got a good portfolio strategy. I've generalized all of this in the code. Um, and now I'm working on tracking my paper trading. So here's the results so far. If we run this, um, here we go. So I'm going to run this file, and this will show me where we're at. Today was the 4th day of paper trading. So this is the summary after 3 days. I'm going to start the stream by going into the project, talking about what I'm working on, my strategy for implementing this, what my goals are for the project. I'm going to talk a little bit about some progress on the project, why I'm confident in the model, why I'm confident in the portfolio strategy. And then finally, I'm going to go through and update the paper trading. And it's pretty late at night, but if I have some extra time and I still feel energized, I'm going to start writing the code to automate the paper trading because I got the portfolio strategy working. And as soon as I got the portfolio strategy working, I wanted to start implementing a model. And so therefore I'm tracking everything by hand, and it's really time consuming. It's really cumbersome. This week I haven't had much time to work on coding or exploring models or strategies at all. So ideally this paper trading would run in the background, and I could go work on more models. I have a time bottleneck here. So if I spend each night updating the paper trading on stream, and it turns out this model isn't good after 4 weeks of paper trading, then I'm going to be back to square one and I've just lost a month of time. So I really need to get this running in the background. So if I have time, that's what I'm going to work on. But needless to say, here are the results of the model. I have 3 strategies. They're all working off the same base model, and they all have the same portfolio allocation strategy with one caveat. They have different target volatilities. So this red strategy doesn't have any target volatility. It's just taking the model output, using hierarchical risk parity. Oh, first it sets, it's taking 4 longs and 4 shorts. So each of these models is going long on 4, short on 4 with the idea of being market neutral. This red model, and then I balance the model so that it's beta neutral, balance the short and long positions, how much I'm allocating to each side. And then finally, what's the final thing? Oh, and then I'm using hierarchical risk parity to allocate capital for those 4 positions on each side. So that's what's going on in the red strategy. The green strategy is the same exact thing, except I set target volatility to 25%. So if the portfolio volatility goes above 25%, I start scaling it down. And then this blue line is 10% target volatility. So same thing, if it goes above 10%, we start scaling down. So let me pull up the model really quick. Not the model. Let me pull up my PowerPoint that's showing all the results that I have so far. So these are the predictions from 2 days ago. That writes the predictions from yesterday. So I'm tracking everything in this PowerPoint. And here's the outline for the project. So I have 2 goals. The first goal is to beat the S&P 500 by a significant margin while staying market neutral. So basically the S&P goes up 6% per year. I want to return 18 to 24% each year. Now I'm writing all of this in Python code, so I have a secondary goal, which is to generalize this so it will apply to anything, and this way anyone can create their own strategies for themselves. So this is what the outline looks like. I'm starting with a universe of stocks. I have data going back to 2011. You don't want to use all data. Different things move differently, so you want to isolate a universe of things that have similar price movements. So that's the first step. Once I have this universe, I'm feeding it into the model to train it. or I feed the universe data into the feature engine, which then generates features for the model. The model, I specify which features I want to get, and then inside of model, I'm calling the feature engine class to generate the features. I'm deciding a target. The target should be something to do with returns over the next 5 days, returns relative to market, relative to sector, Sharpe ratio, something like that, probability of a positive return. And then I'm taking the output of this returns model and feeding it into the portfolio strategy, which I just described. So here's the model I have right now. So actually, first let me show the first model I had. So this is training on predicting the Sharpe ratio over the next 5 days. Just a sec, let me change my monitor settings. Oh no, that's not it. My monitor looks weird. I think I need to change the color on it. Why is it not connected? Okay, there we go. So brightness is all the way up. Color. Don't want custom. Reading night. Oh my gosh, that night light is gonna drive me nuts. Cool, neutral, warm. I think I had it on neutral before. So this is the first model I got this about 2 months ago, and this is training to predict the Sharpe ratio over the next 5 days. And the first reason I'm confident in it is because it's getting all the metrics. I have goals for each of these metrics highlighted in the red box, and it's significantly outperforming my goals for all of those metrics. Not only that, but this decile analysis, if you look here, bottom left, that looks really good. It's exactly what we're looking for. So it should be monotonically increasing, which means each decile is higher than the previous decile. And the bottom decile, the lowest 10% should be the worst. And top decile, top 10% should be the best. And so that's exactly what we see here. I tried implementing portfolio strategies on this, and basically everything did well after 2023. But it failed from 2016 through about 2022. So I looked into this. I tried a lot of troubleshooting to improve the model. But after a fair amount of studying this problem, I found this, so I looked at the regimes. So that decile analysis I showed was in terms of Sharpe ratio. And Sharpe ratio, of course, has a volatility estimate in it. Which makes it easier to predict because volatility is easier to predict than returns. So therefore, Sharpe ratio is easier to predict than predicting returns. So that last decile analysis was showing the Sharpe ratio. Now this is the Sharpe ratio model, but the decile analysis is showing the returns. And so you see here, it's basically not only do these decile analyses, the left plots look really bad on each regime. You see the first two would have given negative returns, pretty significant negative returns in the first two regimes. And but we are getting positive returns in this last regime. So that kind of explains why the portfolio strategy has an easy time performing well on later years and a hard time performing well on early years. And then you also see over here the cumulative returns by decile. The first two regimes, it's flipped. The lowest decile is the best performing. Top decile is the worst performing. But then in this most recent regime, we see the correct behavior. Top decile is not the best, but it's towards the top. And the bottom decile is the worst. So instead of predicting Sharpe ratio, I thought, what if I go ahead and just predict the returns instead? And so this is the same analysis on the returns. You see the decile analyses on these first two regimes still don't look very good, but the returns are positive. Similarly, this bottom strategy shows a really good decile analysis. This looks really nice. And we see a nice spread, and we get a nice steady positive return. It's just marching upwards in trends. So I decided to go ahead with this model. I just needed to find a portfolio strategy for it. So I was looking at that. I think I might have deleted my slides from the other day. Yeah. Let me look at my PowerPoints real quick to see if I could find it. So let's look at all windows. My eyes are so dry. I think I'm dehydrated. All right, let me pull up all the PowerPoints. All right, not that, not that, not that. Not that. Not that. So did I put it in here? Oh. Show all windows. Optimize strat. Oh, good. Okay, I didn't delete the slides. It's on a different PowerPoint. So I got to consolidate my PowerPoints here. But, oh, yeah, good. So this was looking through. I started going forward with 5 shorts and 5 longs because I found the fewer number I was using, the better it performed. But before I did that, I wanted to go through and see, can I optimize the number of positions to have? So this is just looking through different things. So this is model 1. This is 4 longs, 4 shorts. And then with 4 longs and 4 shorts, basically this was the best performing. I don't know where the slide is that's showing the different number of positions, but I tried all the way from 1 up to 10 positions, and 4 positions was performing the best. It was a nice smooth peak. With 4 as the optimum. And you see, if I implement the unscaled strategy, so this is that red one, the red line here, you see the worst drawdown is about 35%, but in the recent years, the worst drawdown would have been under 30%. And then this is, I just was looking around at different target volatilities, and there's actually some nice, really nice property of this model that makes it simple. Which is whatever you set as your target volatility, that's roughly the annual return. So here I have target volatility set to 10%. I'm getting 9.8% annual return. Here it's set to 20%. I'm getting about 20% annual return. And not only that, you get 10% returns, and the worst drawdown is about 10%. Here I'm getting about 20% returns, worst drawdowns 20%, targeting 40% volatility. It's a little bit off because that's getting close to the unscaled strategy. But basically, if you keep it under 30, like you see here, 30% target, we have 30% returns about, and worst drawdown 28%. So if you, whatever you set the target volatility for, that's going to be roughly your annual returns if it's 30 or below, as well as the max drawdown over time. So based on that, I chose these 3 strategies. I'm using 10% to be conservative, 25% as a balanced strategy, and then unscaled as my high return, high risk strategy. And so now I'm tracking paper trading on all of these every day. So let's go through and get the results for the model for today. So let's pull this guy up. All right, so we're going to say 5/29. Let's put today's date. We'll say this equals that. Then fill down. 1, 2, 1, 2, 3, 4, 5, 6, 7, 8. And then the close date would be one day after the previous day. Okay, then let's get the positions from yesterday. So let's make the order the order's the same for all. So no, I'll do that later. So let's just put these in. So our positions, we have bird, ASST, lunar, we have PPTA. Those are the longs. And then the shorts, we have SanDisk. Hey, Hike, how are you doing? Man, sorry I haven't replied to your message on Discord. I've been so behind. I have so much work to do. At work, I'm getting killed. I'm honestly just worn down, so I'm looking forward to relaxing this weekend. But my plan is to reply. I mean, I'm not relaxing. I have work to do, but I'll try to relax a little bit. But yeah, all that to say, I'm going to reply to your message this weekend. Sorry I haven't replied. 0.08 2316 0.06 2967 0.06 4372 0.9 here it's negative of course because they're shorts minus 0.9 20449 minus 0.65 9764. Next one minus 2.000943. Next one, oh, what did I miss here? Minus 0.9. 0.064. Oh, okay, I just missed this one. Okay. Where's paste? Okay, 0.062. Okay, and we need number of shares, and we'll be good on this. What is predictability accuracy we have for now? On stocks, it's working on a portfolio strategy based on hold for... Yeah, that's what... Well, the portfolio strategy is just based on the model. So the model's predicting returns over the next 5 days. And so since the model predictions are what's going to happen over the next 5 days, I'm implementing the portfolio to happen over the next 5 days. Hey, Soulwater. But what does predictability accuracy mean? The auction started, but it's going very slowly. Why is it going so slowly? I thought, the auction. Well, tell the team captains to hurry their asses up. Why is it taking so long? What are they waiting on? minus 1.530412. Okay. Now the buy open price. Oh, we need to fill out the number of shares. So here we have 278, 61, 29, 144, 3, 169, 63, 23. Okay, now let's go get the prices for these stocks. What's that called? Trading View. But the auction shouldn't. I thought the auction would take maybe like a half hour or so. I guess is it asynchronous? So people just go and order and they go whenever they get a chance. Predictability accuracy means how much a future price range of stock our model will say based on a rolling look back. Wait, predictability accuracy means how much a future price range of stock our model will say based on a rolling look back. How much a future price range. So, but like, what's that? How do you measure that metric? I mean, is it just, yeah, I don't know how to measure that. Directional accuracy we can measure. Oh, wait, what's it? What was it called? Predictability accuracy. So what do I mean, I don't know how to assess that. I guess you could get R squared on it or something, or like chi-squared, least squares or something like that. Okay, so let's get the first one. Bird. Bird went down today. So 9:30 was the open, 4.24. And the buy price. So for a conservative method for paper trading is to say my buy price is the worst price in the 30 minutes of trading. So here I'm going to use this high here since we're going long on the stock. The worst place to buy would be at the high, so we're going to put 4.19. Wait. High. I don't get that. For this candle. Oh, okay. 4.19, that's right. Chi-squared. Yeah, I haven't done chi-squared yet. But I also, well, actually, I can't even assess it right now because I haven't closed any positions. So everything's open right now. It's all open positions. So I can't, you can't, since this is only the, today, Friday, was the fourth day of paper trading. So, since I haven't closed any positions, I can't assess the accuracy yet. And really, it probably won't be useful assessing the accuracy until we have a significant sample size. Well, this guy, oh my gosh, I got killed again. I think, oh no, this rose. All right, so the open, 17.45. My buy price would be the worst price in the first half hour of trading. So it's this candle, high of 17.65. Okay, now we have lunar. Wow, another great day for lunar. Oh, a good day after a hard drop. So what's it look like? Wow, how volatile. But we're on a nice steady march upwards. So the open lunar, we're going long. It opened at 42.6, and that was the worst price in the first half hour. PPTA. Now, this strategy of getting the worst price in the first half hour, I'm not sure how well that. I don't know how to automate that really. So the open on, what are we on now? PPTA. The open. Oh no, that's Thursday. Friday, 9:30. Okay, so 9:33. Okay, so 9:30. Let's say the open was 26.58. Where is Trading View? What do you mean where is Trading View? Like yeah, wait, what do you mean where is it? It's on the internet, I guess. Um Today is weekend, so I'm hoping today we might see progress in auction. I'll be right back. Yeah, good, I hope. But yeah, if we go to check a predictability, we are going to get random noise. Yeah, not enough data, I agree. Have you heard of chess sets made of camel bone? No. Sounds like sounds like something they would do in Saudi Arabia. Best way to apply a strategy for a currently running market or data to check your strategy. You mean the chi-squared or the predictability accuracy? Um, so let's get over the last day. 931. Oh, PPTA. So the worst price for a short would be the lowest price in the first half hour of the day, which is the low here, 26.43. Now let's go check out SanDisk, which we've been predicting SanDisk to go short for the last several days. And look at that, man. Seems like a bad pick. But let's see. So 930 open 1682.88. So I wish I would stop taking these SanDisk positions. Buy price is the worst position in the first half hour, so it would be the low of this candle, 1657. Good to go. And then skills. It's popular in India too, camel bone set. They have camels in India. I never knew they had camels in India. I thought camels were like a desert animal. India doesn't have a lot of deserts, right? My understanding is that India has so many people because it's a very fertile place. Hey, Sir Night Night. Good evening. Happy Friday. I don't think you're showing your screen. Oh, man, you're right. I don't know why it does this. But thanks for telling me that. You did that once before, like a couple months ago. All right. Display capture. Get my other display. Okay. Send to back. Good to go. Thank you, Sir Night Night. That really helps me out. Oh, there is a desert in India? Sakuni and Mahabatra Made dice out of his dad's backbone. What the fuck, man? Oh. That's what you meant, where's Trading View? Yeah, sorry, my screen was frozen. I should be back now. It looks like it's back in OBS Studio. Let me go to live on the stream and make sure we're good. Yep, looks good. Okay, so back to SanDisk. Okay, we've documented SanDisk. We've taken a short position on SanDisk 3 days in a row and lost money 3 days in a row. So I don't know what to say about that other than it seems bad. Oh, I actually never really understood why India was called a subcontinent. Okay, here's today, 931. And the worst price would have been the low here. So 8.75. Our buy is at 8.53. Okay, now let's do HCAI. Well, what is this? This is exactly what you're talking about, Sir Knight. I mean, what the hell? Oh, that's because this is a Chinese company. So I think it's just sitting here flat because the Chinese market was closed. It's Friday. It would be Friday night in China. Friday night or Friday morning. So. Oh, I don't know what to even make of this. Here we go. Open was 8.8. The worst place to buy. I mean, this kind of sucks. Oh no, okay, 8.8. No data. I think I need to get a better universe, but the worst place to buy would have been the low here. So 8.8 and 8.6. A can. Open at 21.01. Friday at 9:43. So open 21.01. And the worst place to buy would have been the lowest price in the first half hour. So here, the low 20.97. So that would have lost money. Looks like it was a rough day if I had to guess, but let's see. Did post no preference update the data? Anybody use Claude Opus 4.8? No, I didn't even. Last I saw was like 4.6. About memory, so it's probably going to charge me. Did you guys see there is some company? I don't know if this is real or not. I just saw it for a brief second, but there was some headline about some company didn't set employee limits on Claude and they got charged $500 million. I don't know if that's real or not. Oh yeah, here's Opus 4.8. 4.8? I swear I thought I was using 4.6 like 2 days ago. So let's try it out. If I get to writing code, I'm going to try that out. So let's see. Post no preference. Is it updated? Databases. Updated 14 minutes ago. Stocks updated an hour ago. So we're just in time. So let's pull the data. Let's close the server. Let's pull the data. Anthropic said they are planning to release their Mythos class models in a couple of weeks to pro members. That's me, right? We get access to the. Oh, good. We'll get rich. We could hack banks, right? Wasn't that the whole thing? As the everyone was saying, Claude's new AI supposedly could hack banks. So, because banks all use archaic, like Fortran code and stuff. So that's what they were saying several months ago. Mythos should be a game changer if they're improving on it like they have with Opus 4.8. Why? What's better about 4.8? It just works better, or what? Oh, you're not buying it, Hike? Why not? You think it's all hype? Okay, good. So we got the data. Now let's pull it. So let's go here. Stock market tool. Let's go into data retrieval. Let's run setup. Python 3 setup. Data.py. If you know a cybersecurity, you know how to perform. Otherwise, nothing. Because is useless shit, bro. Wait, what's useless? Cybersecurity? Cybersecurity is like very important, don't you think? Can you hack Pat's credit card number and give it to me? Yeah, great. I'm like the last guy whose credit card you would want to hack. You could steal all of my debt. You can become in debt. You could go on like a $500 spending spree. Amex loves me. I'm their best customer. No, I'm just kidding. I'm pulling myself out of credit card debt. I'll be out soon. And then I think in August I'm going to move down closer to work, because right now I live at my parents' house. It takes me a half hour to commute. So we're going to get these positions for today, but I'm not too excited about it because I think I would have just lost money. So let's think and let's start making a plan for, let's make a plan for the live paper trading infrastructure. Okay, so we're going to start with a strategy. I'm going to make this a text box. Strategy. Okay, let's put that inside of a shape. I like the rounded one better. And let's make this nice Dodger blue. Okay, so in this strategy, we have a universe, we have a model, and we have a portfolio strat. So these should be flexibly defined in this strategy. Okay, so once we have a strategy, okay, so we've got data. Now let's go look at it. See if I have my recent commands still available. Yes, good. Now let's get the data. df equals that. Then we'll say, let's look at the maximum date in the data frame. Credits is a cyber forensic. Okay. Mythos is supposed to be Anthropic's answer to address the security hacks that have been happening. Oh, it's the opposite? I mean, if it addresses the security hacks, can it break the security hacks? Do not ask a brainless question about credit card soul, bro. Hey, I don't know much about what you're doing, but it's interesting. Could you explain it like I'm a 10-year-old? I don't know. I could try. Let me finish looking at this data, then I'll go through the project overview real quick. No, dude, I'm not worried about debt because I don't have any student loan debt and I'm an American, so I can just declare bankruptcy. See you later, man. Life is good. I wouldn't use Claude, but the new Opus 4.8 is pretty good. I thought you said you liked Claude for like general stuff, like thinking. Like that one day you said look up something about the Strait of Hormuz in Claude. It's outperforming other models in honesty. Yeah. That's what's cool about the AI models, actually, because everyone says, oh, the AI models are going to be so powerful, but the best ones are going to be the ones that are honest. But how do they assess honesty? I think a GPT has more data directory than a Claude. Really? ChatGPT's good? I was just talking to my coworker today, and I told him that I thought ChatGPT sucked for code, and he said, no, he uses it. And he's way better at computers than me. So the max should be the 29th. Indeed. We're looking good. All right, so now let's go look at our symbols. So we have all of these. Now we want to add in, the only new one is PPTA. Then let's see what the open prices are. df where df.date is equal to df.date.max. Okay, now let's run this. All right, so bird. Let's see what our returns are. I think it's going to be pretty bad. 4.12. So bird is 4.12. ASST is 17.67. So slightly positive. Lunar is 43.83. Yeah, I like Gemini too. Declaring bankruptcy doesn't eliminate your debts. You make a deal based on how much you can reasonably pay. It stays on your credit for 7 years. Oh, Well, I knew bankruptcy stayed on your credit. I didn't know. Yo, that sucks. So that's just like, well, I guess. I mean, I don't have any assets. What? Um, I guess they could. Oh no, they could take my computer. Well, then I won't take. I won't declare bankruptcy because I won't. I don't want to lose my computer. PPTA is 27.07. So the longs did pretty good. SanDisk, on the other hand, went up 1694.98. Skills, 9.37. Oh man, so I did well on the longs, but I'm getting killed on the shorts. HCAI, 8.1. ACAN, 21.99. All right. So let's update all of these. So we have PBM, 4.15. We have Bird. What was it yesterday? Oh. 4.15. Now Bird is 4.12. PBM. Bird 4.12. BNAI 14.84. HTCO 2.62. HCAI 8.1. ACAN 21.99. AXD 103.16. Okay, you're into credit card details. That's Chapter 7 bankruptcy. Chapter 11 is just a corporate reorganization. Man, I don't know anything about this stuff. Kind of difficult to steal credit these days. Credit card corporations have too many tools at their disposal. That's why you don't hear about it that often these days. Yeah, I basically never hear about it. I don't know anyone who's had their credit card stolen. AXD 103.16. BBGI 14.9. PBM, again, we have 4.15. Bird 4.12. BNAI 14.84. Lunar 43.83. SanDisk. Oh my gosh, please stop taking the SanDisk positions. 1694.98. All right. Skills. Where is that? 9.37. $9.37 for skills. Yep. HCAI 8.1. ACAN 21.99. Okay, now let's go HTCO. Okay, so after this we'll be done. HTCO 2.62. 4. Bird 4.12. Lunar 43.83. ASST 17.67. SanDisk 1694.98. Skills 9.37. HCAI 8.1. ACAN 21.99. Oh man, who said that? Who left that comment? They wanted to get an overview. Quintink, are you still watching? I forgot I was gonna give an overview of the project. So let me know if you're still watching, and I'll go over that. Sorry, I forgot. So he did update SanDisk, right? 1694. Skills 9.37. HCAI 8.1. And ACAN 21.99. Okay, so we finished. And what's the return at today? Oh my goodness. Minus 1203.96. Hey, G Spider, how are you doing? I know how to perform a SQL injection. Oh, I worked. Why Ireland and Scotland suck at cricket while England is a top team? I don't know. Yeah, I actually had a cybersecurity job for like 3 months. And this guy hired me, and I took some interview, and he gave me some riddle was the interview question. And he said, "Oh, I'm impressed. I got it right." And he said, "Oh, I'm impressed. Come out for this conference. Have you guys ever heard of DEF CON?" I went to DEF CON in 2022, and I worked for him for 3 months. And then he texted me. I was moonlighting, so I was working 2 jobs at once, so I wasn't getting enough work done. And he texted me. He said, "You're either dumber than I thought or lazier than I thought. You're fired." Gspread. Ooh, Gspread Python library. Hey, that's what I'm talking about, man. Thank you. I'm in the Discord. Gspread. What, you want the overview? Python. Thanks, Stefan. That's the best thing about YouTube streaming is instead of working it on my own and just going crazy, people comment, "Yo, use this, try out this tool." For automating paper trading. Oh, good. Yeah, if you, of course, you know about DEF CON if you know about cybersecurity. Wait, yes for, what's that mean? All right. So here's the. If you're interested, comment if I should stop talking about this and go back. But this is the overview for the model. My goals: beat the S&P 500 by a significant margin. So S&P is 6% per year. I want to do 18 to 24% per year. Yeah, DEF CON was extremely interesting. They had this thing there. The year I was there was 2022, so it wasn't too long after the 2020 election. And so Steve Bannon was at, if you guys know who Steve Bannon is, he was at DEF CON doing some report on it, and they kicked him out. And that was like the big news. And then at the closing ceremonies, they said, "We kicked out Steve Bannon," and everyone went crazy. Have you guys seen Steve Bannon's interview with Epstein? No, why would you make your system public? I mean, if don't make your edge public. Yes, for the short overview. Yeah, okay, short overview. Boom. My goal: beat the S&P 500 by a significant margin. S&P 6% per year. My goal: 18 to 24% per year. There we go. That's kind of an ambitious goal. Honestly, I'd be happy with 12%. Yeah, so 18 to 24% per year is my final, someday I want to return that. For these first strategies, I don't need 18 to 24% per year. I'd be happy with like 10 or 12% per year to start out with. And then I could just slowly improve and iterate and squeeze out. Yeah, of course, Steve Bannon was there. And squeeze out the better returns. So that's my goal. I want to stay market neutral. So I don't want to have to worry about bear or bull markets. I want to get steady, stable returns regardless of what the market's doing as a whole. So the outline here is at the bottom. First step, we have data going back to 2011. You don't want to use everything. Different assets move differently. There's some assets in the data like NASDAQ test tickers, which actually aren't even things you can buy. ETFs move differently from normal stocks. All sorts of things. Financial instruments are going to move differently from like Apple. And so I'm isolating a stock universe using only common stocks, things like Apple or Tesla, real estate investment trusts, and ADRs, which are foreign companies listed on the US market. I'm taking that stock universe and feeding the data into a returns model. In the returns model, I define some features I want and how many days to look back for the features. And then it's calculating those features, feeding those into a light gradient boosting model, and then generating a prediction for the target. So the target should be something to do with returns, something like returns for the day, probability of a positive return, Sharpe ratio, returns over the next 5 days, something like that. I have two models. The first model I got that was good was predicting the Sharpe ratio, but the Sharpe ratio is easier to predict than returns because volatility is included in the calculation for Sharpe ratio, and volatility is a lot easier to calculate than returns. So that means the Sharpe ratio is a lot easier to calculate. And then the final step, once we have a returns model, I'm going to take the output of the returns model and decide how to allocate capital accordingly. So the way I'm doing that right now with the portfolio strategy, I'm taking the best four predictions and the worst four predictions. When I tried different strategies, I found that going four positions was the optimal. It was a nice smooth curve, and four positions perform best, so I'm going with that. I'm going four positions short, four positions long. And then I'm taking the taking the predictions of the longs and the shorts and then balancing them. So you're not saying give $10 to the longs and $10 to the shorts. You're deciding how much to allocate on each side of the portfolio based on the sum of the beta for each side. So whichever side, basically if you that helps it be market neutral. If you make it so it's beta balanced instead of dollar balanced on each side, that helps make it market neutral. And then once I have how much money to allocate each side, I'm using hierarchical risk parity, which is basically you find the correlation of stocks. And there's something else that goes into it. I don't remember what. And you're deciding how to allocate capital based on the correlation of the stocks in your basket. So that's what I'm working on right now. And I have three different strategies that I've implemented for paper trading. So, and they're all really just, they're the same strategy with one caveat. So, where did I put that? PowerPoint. Oh, I don't want to show that. No. That's fine. That actually doesn't matter. Nothing sensitive is on there. All right, let me pull up my PowerPoint real quick and I'll show you the performance. Yeah, so this is the unscaled strategy. So this is the strategy I just described. That's it implemented in a back test. And so you see the performance looks really good. The worst drawdown, however, was about 35%. So that would be really hard to stomach in real time. So I would like a lower drawdown for myself personally. And then also if I can keep iterating and get a really good strategy, that I can get funded, you can't have a 30% drawdown. You want, honestly, probably less than a 5% drawdown. So here I was varying the volatility threshold, and basically, one nice thing about this model, I don't understand exactly why this is, if it's a coincidence or if this is, this is the first time I've tried a portfolio strategy, so I'm not that comfortable with it. But so I'm not sure if this is a coincidence or if it's just a property of portfolio strategies. But I'm scaling down the exposure of the portfolio based on the rolling volatility. So and then I set a target volatility. So here, for example, the target volatility is 10% volatility. And so that means if the volatility goes above 10%, start scaling the portfolio down using a sigmoid curve. So if it's just barely above the threshold, it's very small scaling. If it's significantly above the threshold, it's going to be pretty significant scaling. Now, the returns for this look good. The drawdown looks really good. What's really hopeful about this is the drawdown gets less as time goes on. But what's not good about this is it's barely anything's allocated the whole time. So I don't know what to make of this, whether this would be good or bad. It actually might be good. I could just throw like 80% of the... Well, yeah, I could just do a Buffett portfolio with the remaining 80%, but I don't know. So I'm doing 10% target volatility as a conservative strategy. I'm doing 25% target volatility as kind of what I would want to implement in the portfolio. Oh, what I was going to say is the thing that I don't know if it's a property of portfolios or just like a weird thing of this model is whatever, if the target volatility is below about 35%, whatever I set the target volatility to, that's about what the drawdown is, the max drawdown, and it's also what the average annual return is. So that's a bit confusing to me, but and somebody said, why not use... Man, you guys have a lot of comments. Oh, why not options? So I'm not trading options right now. I would like to, but I don't have good data for it. So I know there's like an options pricing model where you can simulate options prices, but I'm not sure how that varies from real data. And the data I'm using is from this guy right here. This guy is amazing. He uploads this data every single day. He updates. So he does have this options database, which again he updates every day. Updated 41 minutes ago. But when I was looking at this, it doesn't include. There's something that this doesn't include. I don't remember, but this data set's obviously going to be enormous. So, but yeah, options will be something to implement on this. But I have to look further into it, and ultimately, I do really want to get an options strategy working because I don't have much money, but the money I do have is mostly in my Roth IRA. And so I can't short sell in my Roth IRA. I can't do this market neutral strategy. So my goal is once I go live is, I'll allocate some money to my portfolio. But it would be nicer to just implement it in my Roth. And then, of course, it's also tax free. So in India market, you could look for system, do find a vault. On 27, I got a JPPWOER. What is that? JPPWOER. I'm happy. Even a day I could earn 500. What, USD? 500 or 1,000 USD? Yeah, so if you're watching, don't forget to subscribe if you think this is interesting. I work on this every day. I'm slowly marching towards something I can implement live to regularly make money from. And my goal is just run a script every day and let the models do their work. And then I could check in periodically on the model performance. But and so where I'm at right now is paper trading. I'm tracking the paper trading performance and updating it for today. And this unscaled strategy performed really poorly today. So. But I only have the unscaled strategy, so I need to go update the moderate and conservative strategies as well. JP Power. What is that? Whoa, 500 to 1,000 per day INR. What do you call that? An INR. It's Indian currency, but it's Remini. What is it? What's the colloquial name for it? Oh, rupee. Yeah, duh, of course. Yeah, my coworker said that you can get um my coworker said the average salary is what, 1,000 rupees a day? Does that sound right? So you would be making the average salary? Yeah, 20 USD. Yeah, that sounds. Yeah, so the average, I think that's what the average salary is. So let's copy this guy. Hey, Flower Power. Rupee. Yeah, thanks, guys. The stream's delayed, so I already looked it up. Oh, so this guy shouldn't be gray, right? Oh, no, it's not. Okay, so the only thing we have to update here is the positions. Now, let's make sure that the order is all the same. It should be. It has been every day, but let's just make sure because I'm scared of fucking something up. So, bird, ASST, ASST, bird, ASST, lunar, PPTA, lunar, PPTA, lunar, PPTA, SanDisk skills, SanDisk skills, SanDisk skills, HCAI, ACAN, HCAI, ACAN. Yep, good. Okay, so let's update. The only thing we have to update here is the number of shares. So bird, we're going long on 182. ASST, we're going long on 716. Oh no, that's dollars. So 40 shares, 19 shares, 94 shares, minus 2 shares. Oops, just 2. Use the magnitude. 110 shares, 41 shares, and 15 shares. And then let's update the prices. Copy. Current price. Okay, and then what's the return? We're at minus 320.06. So they aren't working well, but at least it's a nice demonstration of how volatility scaling is changing the model. Let's fill down these guys. All right. And finally, target volatility 10%. Let's paste in the current price. And then let's paste in this guy. Copy 10% target. Let's paste. What is this? Oh, it's fine. Get rid of those guys. Wait, was I putting the right things here? So it should be 182. Yeah, that's right. Okay, now target volatility is 10%. And how many shares do we go on each? Per day, 1,000 is good. Oh, like for a salary? What is it? It's like 500 per day is the salary or what? For me, I'm using a 30,000 rupee. What? That's your salary? But, oh, 30,000 is, you're saying that's your portfolio? I suggest you plug yourself into it to get real bid ask data. Oh, what platform is my Roth IRA on? It's on Robinhood, and Sir Night Night says that's no good for me. Um, yeah, I should do that. I don't know. That's kind of gonna be my project for this weekend is figure out how to do that. Are these prices updated? I think I just updated 4.15 at the top. Yep. Okay, so let's finish filling this out. So, what are our positions here? So, bird. Why are you scratching up the floor, buddy? Bird, we're going long on 73 shares. ASST, we're going long on 16 shares. Lunar, we're going long on 7 shares. PPTA, we're going long on 37. SanDisk, we're going short on 0, but we'll figure out proportionally what that is. So 1511.18 and versus roughly what, 1700. So 1700 was a little high, so we'll say 0.9 shares we're purchasing of SanDisk. Okay, then 44 on skills. HCAI 16. ACAN 6. Okay, so very good. And this guy is getting killed. Minus 327.86. Minus 327.86. Save. And U.S. Indian market has not moved much in years, so when you trade or invest, chances you lose money if you're not holding for years. Yeah, join the Discord, everybody. Let's get some interesting conversations going. It would be cool if every day I checked it out and then there's just we were doing pretty good on there in April. But then it kind of fell off. People aren't commenting much in there. So these guys are all documented. Let's save this and run the plot. That's not going to be very fun because we're just going to see some big losses. So, I mean, why is the loss so extreme here? Did I do something wrong? Let me check my positions again. 6, 16, 44, 0.9, 37, 7, 16, 73. Yeah. So save. And let's run our plots today. What's the JP Morgan news? Okay, and here's our plot. It looks chaotic. Now, the 10% volatility and 25% volatility strategies are basically the same. I don't know what to make of this. That looks terrible. But anyway, it's late. I think that's going to be it for me tonight. I'm not going to work on the coding. Tomorrow I'm going to do a long stream. That's going to be my goal for the weekend, is automate the paper trading infrastructure so that next week I can just run some scripts and update this stuff. I don't want to be going through and live updating all of this every day. And then I could spend while I'm, updating it, should just be run of a line of code, and then I can work more on the models, portfolio strategies, universes, etc. I have a lot of to-dos. The to-dos are almost endless. So anyway, thanks for watching. That's it for today. Subscribe if you haven't yet. If you think this is interesting, I work on this every day. I'm slowly marching to a good strategy I can go live with. So if you're interested in that sort of thing, subscribe to follow along. Check out the GitHub. You can create models for yourself in Python in under 100 lines of code. You could do the same thing I'm doing. So check that out if you find it useful. Start, of course. Let me know how I can improve it. And join the Discord, as we were talking about in the chat. So thanks for watching. That's it. Have a good rest of your night. Adios. Tune in tomorrow.